50 seconds left to go before we wind up for the day. And Kunal, once again, an extremely quiet day for the index. When do we break out of this range?
Yeah, that's the bigger question. I think generally breakouts, as such happen after a fresh expiry start. But the concern is that it's been almost 50 days for the Nifty to try and trade into this range. Almost the last 2.5 odd months is where the Nifty is grappled to this 300 point, 500 point kind of a trading range for itself. So very difficult to anticipate that when and what could trigger this breakout of the indices. But generally we see that at least 3 months of consolidation is a good enough time for the index to break past, or after 3 months is where the index generally breaks past about consolidation. So hopefully the month of September is where the markets can finally snap out of this trading range.
Metals are the biggest mover in the cash session today, Kunal. Last 15 odd minutes of trade, we've seen a decentish move. JSW Steel, Adani Enterprises, just some of those movers in trade from within the Nifty pack, and metals in particular. I wonder what the call specifically on a JSW Steel is at this point of time. We've seen a very decent rally. We were sub 1,000 on the stock price not too long ago. We're currently at 1330. What next?
So yeah, I think metals, particularly as a sector, is something which we've been bullish on over the last, I think, few weeks. Specifically when the likes of Hindalco, etc., were trading at closer to their long-term averages around say 930, 940 approximately. And in that same time span, I think JSW Steel was one of the ones which was trading at 1220, 1230 mark. The stock has been into a very slow, gradual uptrend, but it's now looking quite strong. It's as if that the stock is picking up good momentum in stages, which started off in a very slow, gradual rally, and now it's picking up pace. So that I think is attractive. But when I was looking at the charts comparatively in terms of the relative strength strategy, Tata Steel is something which I think should also be could also be looked at from the metal pack. The stock has relatively underperformed most of the other players in the metal stocks, and looks like that it could be a time where maybe the weighting within the metal stocks could be shifted from the likes of Hindalco towards the likes of Tata Steel as well as JSW Steel.
Okay, that's the trade coming in on metals right now. But Sunny, just wanted to address private banks as well. Got a very interesting take earlier this morning from CLSA as to why HDFC Bank is their top pick, and that's where you have the only bottom-up idea perhaps. Would you concur with that view?
Yeah, definitely. At least in terms of valuation, we are seeing that likes of HDFC Bank trading at a multi-year low, and at the same time going forward, as we all know that historically during the last 2-3 quarters there has been a case of a balance sheet growth which is leading as compared to an P&L growth because of pressure on margin. So going forward, as the NIM stabilizes, I think all the private banks should start reporting a kind of double-digit kind of NIM net NII growth, and that should help. That should augur well in term on the back of very strong reasonable valuation. So no doubt ICICI Bank has been a leader, and there we have seen a strong outperformance. Coming to other private banks, I think HDFC Bank, maybe FY27 is a year where we may see a growth at par with an industry, and then FY28 onwards, maybe the benefit of merger will start playing out, and then gradually we will see an outperformance as compared to an industry growth. So if somebody is 12 to 18 months has got an investment horizon of 12 to 18 months, HDFC Bank definitely one can consider. And even Axis Bank, we have seen that most of the banks this quarter have focused on corporate lending, which has led to some pressure on margin. So going forward, as the book shift in favor of retail, we will see a gradual expansion in margin also. So even Axis Bank continue to remain our top pick among the private banks.
I wonder, Kunal, what the view with regard to a Vishal Mega Mart is, a 10%-ish kind of move on the stock price today. Can that sustain? Should one continue to be long on a counter like this?
See, I think what happens is the stock was beaten down massively over the last 3-4 months. I think Vishal Mega Mart was almost at 150-55 not long back, and the stock fell down to 104, 105 just about till last week or so. So after like a 30%, 40% correction, you're bound to see some bounce back. The initial flurry of bounce back happens is on the back of news flow. When there's some kind of a positive news flow, you see a jump up in volumes, you see the stock opening with a gap up. But the concern with today's move for Vishal Mega Mart is the selling which has come from the highs, and that has led towards maybe a resistance of sort at 115 to 116 mark for the stock. So I would probably be a little skeptical in towards the stock price seeing any kind of a major follow through up move. and the gap which has been created today, hopefully that gap would probably be at least partially filled in the next subsequent days. So my expectation is that the stock over the next few days should come back into a corrective phase.
Okay, closing in for the day, and the sectoral texture is pretty much the same. In fact, if we can just bring up the heat map for how the individual sectors have panned out, while metals, of course, has taken a lead, would be curious to see where is it that the drag has really come in from. And it's been cement, which has been a rank underperformer today. Defense as well lost about almost 1%. PSU banks have been a drag. Nifty Bank as well did not do anything. Financials, private banks, consumer durables, chemicals, autos, they were largely flat, along with pharma and healthcare. FMCG as well, a flattish move. Oil and gas as well, quiet. IT just a smidge of a green. And I think the only significant winner today has been the Nifty Metal Index, 1.5% higher for that particular index, along with Realty, which has also managed to eke out a gain for itself. But again, very marginal gains at that, nothing too meaningful. So it's really been metals which has been the only standout performer, so to speak, on the upside. Let's take a look at the Nifty composition as well and how some of the Nifty names as well panned out, because you did have Hindalco, which contributed maximum to today's index move. Infosys, HDFC Bank, JSW Steel, though I doubt HDFC Bank because it closed in a little soft actually eventually. Bajaj Finance as well has been a drag. Reliance, SBI and ICICI Bank, the big ones haven't quite participated in today's move. BEL as well has been a rank underperformer today, along with Nestle, HDFC Life, a Kotak Bank, Axis, Maruti, Bharti. These have all been the drags today. Flat for L&T, flat for Unilever. Aisha did not do anything. ICICI Bank as well, mildly soft. Tata Consumer, TechM. Nothing meaningful really is what you saw. But Kunal, for tomorrow, would you pin your hopes high on metals? And do you sense that this move on metals will stay?
Yeah, it looks like that the move in the metal stocks will stay, because I was looking at the dollar index chart also, and it's ebbed off quite well from a point of 101 just about a couple of weeks back towards sub 100, sub 99 or 99 thereabouts for the DXY. That I believe could probably aid the rally further for the metal index. And I also sense that now the move is getting a lot more consistent within the metal stocks. Earlier it was just Hindalco and Nalco, which had done very well. I'm talking of this over the last, I think, a week or two back. Now that move is getting trickled to the other names. You're seeing SAIL also, for example, that stock breaking out. Vedanta, I think, had a fantastic day last week, Thursday, Friday, where the stock moved up, I think, 3%, 5% in a matter of a couple of days. Tata Steel, as I was pointing out, is nearing a breakout. JSW Steel is the one which is inching towards a breakout. So it looks like that the metal stocks rally, which started off to be very, very restricted towards maybe 1-2 names, is now getting more broad-based.
Okay. All right, just quickly looking and counting down sectors as well as to how they've performed today. At least 1.6% high on the Nifty Metal Index. You've seen some good, strong move, at least from that particular pack. Welspun Corp within that, Kunal, and that was a big gainer on Friday as well. Continues to gain in trade today as well. 4% move on Welspun Corp, top gainer on the Nifty. SAIL as well doing 3.5%. But Welspun in particular, anything changing here structurally, Kunal, just given the kind of back-to-back moves?
No, I think generally these kind of moves, they happen into stock prices when they run up exceptionally high. We look at this in the Elliott wave structure, and it looks like that the one of the waves in which the volumes, they tend to accelerate when the stock price reaches some sort of a resistance zone. So I think we are hitting that kind of a zone for Welspun Corporation, and that's why the volumes over the last 2 days have been on the slightly higher side. But today's volume is almost or less than half of the volumes which are seen on Friday for the stock price. So I would probably believe that once volumes starts to ebb off, you would generally believe that stock prices go into a price correction or a consolidation. So I would believe that start of next week or from the fresh expiry onwards, you might expect Welspun Corp to come back into a corrective phase.
Okay. All right. Private sector banks, Kunal, what's the view there? And your top picks from within that basket, give us a sense.
So Kotak Bank is something which looks attractive over here. As of now, the stock has regained or reclaimed back its 200 moving average. Compare this to ICICI Bank and HDFC Bank. ICICI Bank has been one one of the more moderate charts right now. HDFC Bank, of course, we all know that the stock has been a big laggard, more than a 10% correction in the last 1.5, 2 months for HDFC Bank from those 850 levels to 730, 740, where the stock is trading right now. So I think as of now, Kotak Bank is something which starts to look a little bit more better. That negativity which the stock had exhibited, I think in the month of July, when the stock corrected from 420 levels to 360, 370 thereabouts, it looks like that the major part of the negativity is now behind and the stock is now coming back into its own. Axis Bank is also trying to find its mojo back again. 1250, 1260 is a bit of a resistance zone for Axis Bank, but I would sense that once the stock scales past about this minor resistance is where the stock can also be considered as a good swing trade.
Okay, that's the take coming in right now on private banks. Sunny, let's get closing comments in from you as well. Where is it that you think leadership sectorally will actually gain momentum, if at all?
Yeah, Aisha, I think again, what I believe is that ultimately the companies which have reported good set of numbers and are likely to do well going ahead. So what we feel is that banks, selective banks across private as well as public sector will continue to take a leadership going ahead. Among the mid and small cap pack, as discussed earlier, auto ants is another pack which we feel can continue to do well. Building material is the one segment where we have seen a very strong turnaround during this quarter. So companies like Kajaria, Century Ply, Green Ply, Green Lamp, Stylam, all the building material companies we feel should take a leadership as we move ahead. And in addition to that, small and medium-sized defense pack companies like Zen Technologies should continue to outperform as we move ahead. So I think ultimately it's a stock pickers market rather than getting glued to an benchmark indices. I think most of the wealth creators are lying in the bottom end of top 750 companies, and there one should focus if somebody want to create an alpha in a short to medium term.
Sunny, great to have you on the show. Kunal, we'll see you again tomorrow. In fact, on that note, we're going to wind it up right here at this edition of Closing Trades. It's a goodbye from Harsh and me.